Good afternoon, everyone. This is Gregory Gosens from Taxpatria. Welcome to this lunch webinar. I am partner with Taxpatria. We are an international tax and advisory firm. Most of you probably know me already. Today's topic is a bit different than what we usually do. And so we are focusing today on insurances. For that, we have invited Tom de Mesmaeker, who I'll give the word in just a second. So the idea of today's presentation is that we'll run you to about 20-25 slides. We will give you a brief introduction. Well, not me, Tom will give you a brief introduction into everything that has to do with insurance in Belgium. If you have certain questions, you can ask them in the chat and we will address them at the very end of the presentation. And then, yeah, I think it's going to take about 1 hour, maybe a bit more, just to run through the presentation and to answer your questions. So insurance essentials. So everything that has to do with insurance in Belgium can become very complicated and is not always easy if you're not a Belgian-born national to understand how exactly it works. Maybe just on the legal formalities, we are a tax advisory firm. We don't provide insurance advice, and so everything to do with insurance, you'll have to go to Tom. The disclaimer, I'm just gonna read it out loud so everybody understands that we are a tax and legal services firm. We do not provide insurance advice. The information shared today is offered only as a general guidance, should not be interpreted as personal insurance advice. Of course, every situation is different. Anything that you want to understand based on your personal situation, anything that you want to decide based on relevant insurance product coverage, suitability should be discussed directly with a licensed insurance broker or a qualified insurance professional, which obviously is Tom and not our firm. What are we covering today? So after the short introduction, what exactly Tom does and how exactly his firm works, we will cover, let's say, quite the standard type of insurances in Belgium: fire insurance, civil liability insurance, car insurance, healthcare. Then there will be let's say, a bit more broader topic on pension insurance, which there I will also intervene a few times to understand or to explain what are the exact tax implications of Belgian pension insurance. Then disability insurance, employee accident insurance, and then the, let's say, more in terms of general business contracts, the indemnity insurance for professionals and D&O insurance. Then afterwards, as I explained, we'll have a Q&A. So any questions you may have, you can drop them in the chat. I will, and Tom will address them afterwards. If you're not able to stay till the very end, or yeah, if you listen to this presentation afterwards, it will be made available to you with a separate link in a few days from now, and also will be made available through our YouTube channel. So then I will give the word to Tom that he can introduce himself, and then we'll take it from there. Tom, it's up to you.
Thank you, Gregory. Thanks for the introduction. So my name is Tom de Mesmaeker, and I am an independent broker. My objective today is to give you a small introduction in the world of insurances. As an independent broker, I am here to give you a few words about the standard insurances. What is independent? I am not on the payroll of any insurance company. I am not cooperating with them directly. I'm independent, so I always search the best solution on the market for you as a client. If we have a best solution with company A, and for another risk we have a best solution with company B, then we can do the both. We can underwrite a contract with A and underwrite a contract with B. So officially, I'm also licensed by the Belgium regulation or FSMA. It's the Belgium insurance regulator. And I'm your single point of contact, of course, if you have questions about insurances. As you maybe already know, Belgium is a quite complicated country, and also for insurances. First of all, we have the language. The most policies on the most contacts with insurance companies are in Dutch or in French. I understand that the most of you are speaking standard English, so it's quite complicated to have English policies. I also work with insurance companies who make translations of policies. And of course, I speak English and I can give you translations and more explanations about the papers you have to sign. And also, I give you a small translation about the content of the policies. If you underwrite a small car policy, for example, you have to sign 4 times, not only the policy, but also other contract documents and administration. So it's a quite complex world of paper. It's not always everything digital. It's also insurances, it's also paperwork. And it's quite complicated. So that's the reason why I'm here as your single point of contact. You can underwrite insurances as a private person, for your family, of course, as a business owner, or as an independent person. So today I give you a very short overview. Of course, if you have further questions about a particular insurance, or you have a personal question, you can always contact me afterwards by Q&A, or after the presentation by email or by phone. So the first insurance we will give you a small explanation of is the fire insurance. You can underwrite a fire insurance as an owner or a tenant. This insurance is not mandatory, but I give you the advice to underwrite a fire insurance to cover all the risks. As a tenant, you can cover your liability to the owner of the building, and also to the third parties. If you rent an apartment, you have the parties below you or above you, left or the right. So it's very interesting to underwrite your liability insurance. Also, you can cover your content, your household, against theft, against fire, against water damage. If you have discussions after a claim, of course, we have the legal proceedings that can be covered. And also, the content can include some IT, hard and software, like laptops or desktops, tablets, and also extra risk, like a swimming pool or a sauna, for example. What kinds of coverage gives a fire insurance? It's not only fire. It's also all the guarantees that you see now on the screen. It's covered by your general fire insurance, like water, broken glass, natural disaster. All these claims can be covered in a standard insurance. On top of the
Tom,
yeah,
if I may just interrupt you here,
yeah,
about the fire insurance. I remember when we were preparing the presentation, we had a brief question about the building policy, because a lot of
yeah,
apartment buildings, they have their own building policy, but that's not always the case. And so if people move into an apartment, yeah, they assume often that, yeah, everything is covered under this building policy, but that's not always the case, I understand. Plus, in the building policy, like the word says itself, covers only the building. So for any household, usually that's not covered by the building policy. So that's, I think, an important element that people understand that they may be insured through the building itself, but they often need to make sure that their, let's say, household is covered by a separate insurance. If that's my correct understanding.
Yes, yes, of course. The building insurance covers the roof and the walls and is paid by all the um, people who live in
Yeah,
the same building.
yeah.
But then you have your own liability and your own household that you have to cover by your own. So
Yeah.
that's the difference between
Hmm.
both.
Yeah.
On top, you have the civil liability insurance. That's a private civil liability insurance that covers the insurance person's liability. The people who live on your same. Oh, I have a problem with my camera. Okay. The people who are living with the same address as you, and it's a quite small premium, about 100 euros annually, and it covers you as a private person and also on the road as an walk. If you walk on the street, or if you are riding with your e-steps or it's your bike, it's also covered if you have an accident. Um, and if you go, for example, you can extend the insurance. If you go, for example, for accidents after sports, if you go on holiday for skiing and you have an accident, you can include an accident insurance in this insurance. Um, and for example, if you have a visit from friends and they have a small child of 3 or 4 years, and the child take a toy and it breaks the screen of your television, your liability insurance will cover the claim and will contact the insurance company of your visitors to regulate the claim. So this is I it's not mandatory insurance, but personally, like it to underwrite for every single person in Belgium because this is a small premium and it covers a wide range of risk. So, and it covers the risk of all your family members, also for your children, for your partner. It's all the same premium. Then we have the car insurance. The car insurance is the only insurance that is mandatory. If you don't have an insurance for your car, you are not allowed to get on the road. Um, we calculate the premiums based on the accident history uh, of the last 5 years. Also, if you driven a car abroad in another country, you will receive a certification of the accident history. And with that certification, we can calculate the premium. Um, Liability insurance, if you have an accident or you have an accident in fault or not in fault, that regulates the claim. But what about the damage of your car? If you have a new car, new cars cost a lot of money. You want to protect your car against accidents. It's always possible. Um, the cost of reparation will be reimbursed by the insurance companies. And we have also legal proceedings. If you have a fine, for example, and you have to go to court because you're driven too much. If you're driven 150, where you are not allowed to drive more than 90, you have to the court. And the costs of the lawyers will be reimbursed by the insurance company. Also including, it's not mandatory, but it's possible, the physical damage for all the passengers, not only as you as a driver, but also for your family members or for the people who are sitting in your car. So it's a tailor-made policy. So if you have questions about car insurances or you are expecting to buy a new car in the near future, you can always contact me. I give you a tailor-made quotation. So to protect your passengers and your car on the road.
Tom, it's now I saw it a few times in the media. It's popular that they give an insurance based on the mileage that you do. Is that something which is more like a, I don't know, a commercial trigger, or is this really something that is more widespread that more and more insurance companies offer? That they say, okay, if I only do, I don't know, 10,000 kilometers a year, my insurance policy is different than if I do 50,000 kilometers. Is that something that is
Yeah.
automatically included or not necessarily?
Yeah. So the premium is also based on the numbers of kilometers you do, but also if you are a professional driver or a private driver.
Mhm,
But it's possible. So that's the reason why I say that it's tailor-made. If you
mhm,
want to underwrite an insurance, I will ask you some questions.
mhm,
The number of kilometers uh, you drive on a personal base or for an employer. You drive a lot abroad or only here in Brussels or in small towns. So that's all made a difference in premiums.
mhm.
Then we had the fire insurance, personal liability, and we have the car insurances. Now we have the healthcare insurance. Um, First of all, if you are a Belgium resident, have always a small protection by the Social Security. The Social Security in Belgium is quite good, uh, but it doesn't protect the full medical expenses. And this is the reason you can underwrite a healthcare insurance. To underwrite a healthcare insurance, we have three necessary conditions. First of all, you has to be a Belgian resident. You have to be living in Belgium. You has to be covered by the Belgian Social Security, and also you go maximum 3 months abroad. 3 months abroad, it's quite complicated because, for example, I have clients who are living 6 months in Belgium and 6 months in Spain. Are they covered by the Belgian healthcare insurances? Yes, but they may go to Spain for maximum 3 months, and after 3 months, they have to come back to Belgium at least for one day. If you come back to Belgium at least for one day, after the second day, you can go to Spain for again 3 months. It's all covered. In case of a claim, for example, if you are living in Spain for the winter and you will be hospitalized in Spain, the first thing that the Belgium insurance company will ask is a proof of going home. A proof of going home is an invoice of a restaurant visit in Belgium or a copy of an invoice of a flight ticket. Uh, So if you can prove that you would be back after 3 months in Belgium for at least one day, you are 100% full covered in Spain, in United States of America, or everywhere in the world. But the maximum 3 months abroad, there's a lot of control over the insurance companies because today a lot of Belgian people has a house in Spain or in France or in Portugal, and there are a lot of people who are living there for a couple of months, especially in the winter. So there's a lot of control by the insurance companies and to check, okay, after 3 months, these people has to be returned to Belgium or not. If you cannot provide a proof, uh, your claim will be not handled. So that's very important. So the health insurance, it's a wide range of coverage, and it covers, of course, the inpatient. What does this mean? This is lying in a bed in the hospital. By hospitalization, this means inpatient. You have the free choice of hospital and doctor. Also, there's a possibility possibility to pick up a single room. A single room, the medical expenses for single rooms are higher, but if you want, it's possible to cover the medical expenses for single rooms. Maybe there's a co-payment of 250 or 150 euros per year, but single rooms are covered. Also includes is outpatient costs. These are costs that are not related by hospitalization. For example, a simple doctor's visit, buying drugs on the pharmacy, contact lenses. So all the costs who are not directly linked by hospitalization are covered. And there's a worldwide assistance. This means, especially for the same person who has to go to Spain, in case of hospitalization in Barcelona or Madrid, you can call to the healthcare insurance, and they will assist you in case of repatriation or medical expenses. And in Belgium, the medical expenses, the invoices of the hospitals are directly paid by the insurance company. It's very important because in some countries, I know you have to give your Visa card or your MasterCard, but in Belgium, it's not done. The insurance companies where I'm working with, like AG Insurance, Allianz, AXA, they have a directly link with the hospitals, and they will pay the invoices.
So Tom, this insurance is on top of what people standardly get in Belgium when you register
Yeah.
for healthcare, I understand.
Yes.
So if you go
Yes.
to the Mutualité, the what is it,
Yeah.
Helan or CM,
Yeah.
that's already included. But then what you talk about now is the top up for that,
Yeah.
the additional
Indeed.
coverage. Yeah,
Yeah.
yeah.
The
Okay,
private coverage. The first
private coverage.
coverage of the Social Security is the coverage from the government.
Yeah.
That's the basis. That's the base insurances, and on top you can have full coverage on health expenses on
Mhm.
private terms, and this is the healthcare insurance.
Yeah. Okay.
Also, the healthcare insurance we can extend it with a outpatient cost of 365 days. So you can extend it with all the expenses non inpatient for a whole year, plus dental care. Dental care is quite expensive in Belgium, um, especially the orthodontics, the crowns. It costs a lot of money. I think one implantation, for example, costs today 2,500, 2,800 euros, and there is no coverage by the Belgian Social Security. The Social Security gives a small um, coverage, I think 50 euro or 100 euro, and the difference you have to pay by yourself. And I give always the advice to extend the healthcare insurance by dental care, especially for orthodontics. Then you have the full reimbursement of the implants or the other orthodontic costs. Another healthcare insurance solution we have is that if you go visit some family or friends abroad, we can underwrite temporary travel and healthcare insurance. So you are resident in Belgium, but you say, okay, I have family or friends in the United States of America, and I go for 1 or 2 months to United States. United States is a very difficult country on based on for healthcare because the healthcare in the United States is very expensive. And I always give the advice to underwrite a temporary travel insurance for the United States of America. But also on the opposite way, family and friends from, for example, Brazil, China, or United States of America, do you want to come to visit Belgium and for you and to visit Europe? We also give the advice to underwrite a temporary travel and healthcare insurance for friends and family in case of hospitalization in Belgium or dental care. Urgently, dental care is also covered by these kind of insurances.
And then in that case, Tom, the insurance would be undertaken through the Belgian resident,
Yeah,
or who is inviting family or
yeah,
friends.
yeah.
Yeah.
If you say,
Okay.
okay, I have two friends who come to visit me,
Mhm.
can we underwrite an insurance? Yeah, the insurance taker is you as a Belgian
Mhm.
resident in favor of your friends or family.
Mhm. Yeah.
I have a question about this one.
Yes.
In case of, for example, I'm Turkish and often I'm visiting my friends and my family, and around 1 month or just around 1 month, maybe 2 months, I'm staying there. In case of each time, do I need to request this one, or you are creating once and I'm using this one? It's my first question. And is this at extra budget to my insurance policy if I'm going to request this for abroad?
Yeah. So first of all, you have a free choice to underwrite a temporary travel insurance or a permanent travel insurance. So temporary, you say, okay, from this date to this date, or if you go often abroad, you can say, okay, I want a travel insurance for a whole year.
Mm,
Uh,
it's a
so
choice.
yeah,
Okay.
it's a free choice. And then your second question was that, of course, there's an extra premium you have to pay for this travel insurance on
Okay.
top of the healthcare insurance. Yes.
Okay. And I have one more question about health insurance as well. I'm new here as an expat. I'm expat. I'm working at NATO. My insurance actually, I'm in the mandatory insurance for the which is government provided,
Mhm.
is mutual. If I'm not pronouncing it correctly,
Mhm.
is it differentiates if I'm going to insured by this one or this one, which is mandatory? Is it extra? Is it increase the rate of the health insurance or not?
Yeah. But you are working for the European Commission?
No, no, just NATO as an expat.
NATO. Yeah, because this is difficult. There's another way of insurance by people working for NATO, also for the European Commission. I know that for expats who are working for the European Commission or NATO, they
Mhm,
have an own insurance platform
mhm,
for on top up of the social security in Belgium or another European country,
mhm.
or as on expat level. So expat level, that means that there is no coverage of any social security system. Uh, so if you want, I can give you more information afterwards, after this presentation, about these specific products for people who are working for NATO and European Commission.
Yeah, it would be better because we have a HR company here.
Yeah,
Most of the people we are getting as an employee and as a outsource, we are
yeah,
providing to NATO and NATO subsidiaries. So we
yeah,
are making we are providing their insurance and etc. All the things are doing by ourselves, by our company. So I'm asking detail. It will be
yeah.
better
Yeah.
if we can
Okay.
a choice to meet with you.
Yeah, contact me, and then we will discuss this, and I give you more information about these kind of products.
Okay, okay.
So, this was healthcare insurance, and now uh, another important issue is building up your pension. Um, in Belgium, we have three pillars. So you can receive a pension amount at your pension age from three different parties. The first one is the state. Then you can receive an extra pension from your employer. As an employee, or if you are self-employed, that's the same for the insurance pillar. And then after the second employer pillar, you have the private pillar. That means that as a private person, you can save some extra insurance pension money. So we have 3 solutions in case to build up pension amounts. First of all, the state. If you are registered in Belgium and you are working as an employee, every month your employer will pay a contribution for your pension, and also you as an employee, you pay a contribution from your gross salary. At the end, at the pension age, you will receive a monthly pension income, and it's a quite difficult calculation, but it's directly linked to the numbers of years you worked and your salaries. As a self-employed person, you will pay to the Belgium Social Security a quarterly contribution. This contribution includes a pension contribution and also a healthcare contribution. So as a self-employed person, you have to pay it quarterly. As an employee, you pay it monthly. At your pension age, monthly income at the rest of your life. That's something different. In some countries, you will receive a lump sum pension amount. In Belgium, it's a monthly income for the rest of your life. Here you see the Belgium legal pension age. The goal of the government is to give to leave us working at an older age. So in the beginning, it was 65 for people who are born from 60 until 63, 66. And for people who are born after 64, today it's 67. So I know today that I have to go to working until my age of 67. That's the legal pension age today in Belgium.
Yes, thank you, Tom. And sorry to hear you need to continue working till you're 67, but I guess that's the same for everybody. Yeah. Yeah, so of course, Belgian pension and Belgian state pension is obviously taxable income. As you may now have salary or business income, which is taxed at the progressive rates from 25 up to 50%. The same rates will apply when you retire in Belgium and you receive a, let's say, yeah, pension payment from the Belgian state. They do allow people to have a limited replacement income in general. So both replacement income and pension income, if this is below a certain threshold, I think it's currently about 27,000 euro per year, to have an additional deduction from that. So I think ultimately it's about 1,200 to 1,400 euro income tax less to pay because of this pension allowance, and depending, of course, on your level of pension you're receiving. But this is bound to be phased out. So while people still benefit from this today, in a few years, they may no longer receive this additional allowance. Most pensions in Belgium are paid out gross, but the Belgian tax authorities already take their cut. So the précompte, the withholding tax, is in most cases applied at source, whereby, depending, of course, on your other income situation, this may be a preliminary calculation or maybe a final tax due or may entitle you to a refund. That all depends on your full income situation when you retire. Then there's also a additional contribution on the pension. It's small rates, but still it's something that is deducted as well. As Tom already indicated, if you contribute either as a self-employed or an employee to the Belgian social security system, you will be able to see the years you contributed on the government website, mypension.be. Actual pension calculations will not be available, I think, until you reach age 55, because people sometimes contact us and say, oh, I worked 3 years in Belgium, I worked 10 years in Belgium, what is my pension? Yeah, honestly, that's more for a insurance specialist to calculate. The government does make those calculations, but only as of the age of 55. Another question we often get is, I only worked a few years in Belgium and my contributions, can I roll them over to another country or can I take them with me? Yeah, obviously not. Your state contributions are final, even if you only worked here for a year or less, or a few years. It may give you some pension. It's probably not going to be a lot, but it's not something you can take with you. Whether your Belgian pension will be taxed in Belgium, that really all depends on where you're going to live when you retire. So if you're going to stay in Belgium and you receive a Belgian pension, yeah, obviously your pension will be fully taxable here. But there are certainly ways to avoid that, in the sense that a lot of people a few years ago, they all moved to Portugal if they have a Belgian pension, because of the fact that the treaty between Portugal and Belgium allowed only the Portuguese state to tax the Belgian pension. Because of their special tax regime over there, ultimately, initially there was no tax on Belgian pension. Then they implemented a 10% system flat rate on foreign pensions. But those systems no longer exist in Portugal, but for example, they do exist in certain locations in Italy, also in Greece. They have, for example, a 7% flat rate on foreign pensions. But of course, it's always important to understand that, yeah, today, if you don't know where you're going to live when you retire, yeah, it's not possible to determine whether your pension will either be taxable in Belgium or abroad. And because sometimes tax treaty gives the right to tax to the source state, Belgium. Sometimes the tax treaty gives the right to tax the pension to the country of residency. So all of that will impact, obviously, your tax situation. Obviously, the Belgian authorities, they don't like it that they have to pay out Belgian pension, which they cannot tax. Obviously, they have to respect the tax treaty. What we see very often is that Belgian pension is considered to be a social security benefit. And on the basis of that, they say then the source state automatically may tax your pension, which is obviously not correct. And so there's a lot of discussions going on for people that are not living in Belgium, that are non-residents here, but do receive a Belgian pension. Yeah, it's obvious that the Belgian authorities don't really like it, people receiving Belgian pension without being able to tax it. Furthermore, if you are in a country that has a tax treaty with Belgium and that says that Belgium is not allowed to tax for a reason that the right to tax goes to the country of residency, you can also ask the pension service to stop withholding the précompte. The withholding tax is not something they are allowed to deduct if under the tax treaty, your pension is not taxable in Belgium. Otherwise, if they continue deducting this withholding tax, you're going to have to file tax returns every year just to get a refund, which doesn't make sense. So at that point, when it is effectively established that you're not taxed on your pension in Belgium, you can ask the pension service, who will then reach out to the tax office to effectively receive your pension gross, not having the Belgian withholding tax deducted. I give the word back to you, Tom.
Okay. So we have also the second pillar, as discussed. Second pillar is an pension contribution paid by the employer. So as an employee, you have a group insurance that you can join, organized by the employer, and your employer pays a monthly percentage of your salary into a pension contract that is managed by an insurance company. And if you are leaving the company, you can transfer your saving money to another employer, or you can let it stay in the contract until your pension age. As a self-employed person, you are free to pay extra pension contributions by yourself or by your own company, and is the same. So you can transfer the pension amounts to another company from your own, or you can leave it until your pension age. Of course, you will receive a tax deduction of 30%. On the opposite way, the government gives you a tax deduction, but they ask you to leave the pension amount in the contract until your age of 67. It's possible to withdraw your pension amount before the pension age, but from this age of 60, but you have to pay a fine. And it's only possible to withdraw money from your pension amount to invest the capital in a real estate. So if you buy a real estate in Belgium or in Europe, or you want to renovate this real estate, then you have the possibility, excuse me, to withdraw the money earlier. If you have further questions about this, you can contact me. I will give you a detailed explanation how it works and in what kind of reasons, what kind of conditions you can take up or withdraw the pension amount before pension age. But it's only to invest in real estate, renovation, or buying some real estate in Belgium or in Europe.
Yeah, so that's yeah.
okay.
You could go ahead, Tom. Go ahead. Yeah, it's pretty standard, I think, but let me
Yeah,
know if you need
indeed. So during the build-up, the employer pays the contributions. Of course, contributions are always linked with taxes because it is Belgium and the government earns taxes always on premiums. So the premiums are 4.4 insurance tax and also the social security tax of 8.86. As an employee, you don't pay any taxes. Only you pay taxes if you at the pension age, but that's we will see in some slides in the further slides. And then, of course, we have an annual return guarantee because the government says, okay, Mr. Employer, you can arrange a pension contract, but you have to give a minimum of guarantee. Today it's 2.25. It was 1.75, but now it's increased. So as an employer, you are always responsibility. You have the responsibility to guarantee the minimum interest rate of 2.25. So as an employee, you know that the pension amounts are indexated by at least 2.25 indexation, what covers the inflation for the part. So the employer's contribution standards as an employee, you or your employer will pay between 3 and 5%. In some plans, if you have a bigger responsibility as a director, for example, or as a manager, it can be increased up to 8%. And in some sectoral plans, it's also at least 5%. So these are the contributions as an employer. As an employee, you can also contribute some pension amounts, and mostly they are lower, between 0 and 3%.
Yeah,
So
I'll maybe take over.
Okay.
Yeah, because this is usually the tax treatment of the pension capital, like Tom said, there is no tax implication for the premiums, at least not for the employee. When you take out your pension capital, different than state pension, which you're never allowed to take out as a lump sum, for this type of plans, the second pillar plans, there is usually the option of an annuity, but that's something that people don't do very often. They usually go for the lump sum. The tax rates are at this moment still quite favorable. So you're only looking at, under certain conditions, a 10% flat tax for the employee contributions. For the other part that the employer has contributed, usually that's 16.5% after legal retirement age. The good thing is that the profit share, which typically in Belgium is not that high, if we sometimes compare this to US plans, for example, the pension plans, 401ks or whatever plans you have in the US, we see a much bigger profit share. In Belgium, yeah, if the employer is only required to, let's say, cope with inflation, usually you should not expect to, let's say, double or triple your contributions. There are also tax treaty planning opportunities here, to the extent that the same rules apply to the second pillar pension as I explained for state pension. So if you are in a country that has a tax treaty with Belgium that allows only for a taxation in the country of residency, then Belgium is not allowed to withhold these 10 or 16.5% upon payout of your pension capital. So, for example, we had clients moving who had a considerable employer plan in place that said, look, I don't plan to pay 16.5%. There are even a few higher rates of 20 and 18% in case your pension age has not been reached. So the 16.5% in some cases may even be a bit higher. But under the tax treaty, those deductions may also not apply if you are resident in another country and you get tax treaty protection. Again, the same social security contributions here at this RISIF and the other contribution apply here as well. Usually that is not covered by any tax treaty. That's something that is applied in any case. But obviously, the tax treaty may avoid that you need to pay the 16.5%. The net effect, in case that you have worked for 10, 15, 20, 40 years in Belgium, and Belgian withholding tax at the 10 or 16.5% has applied, then usually they say that your retention, your net capital is anywhere between 70 and 80% of whatever you initially put in there. Like I said, it's usually taken as a lump sum, not as an annuity. Annuity taxation is also a bit different because in Belgium, if you take an annuity, you're not taxed on the actual annuity itself. You're taxed on a fictitious basis. So if you say my pension capital is 150,000, let's say, I'm not taking out the lump sum. I sell this amount to an insurance company and they pay you X amount instead for the rest of your life. You're normally only going to pay tax on 3% annually of the renounced capital. So in this case, 150,000, 3% of that is what is taxed not as pension income, but as investment income. So that works quite differently because you don't fall under the pension rules anymore. It's then considered to be investment income. So for the rest, I think we covered most of it. Tom, is there anything you still want to add on the
No.
the self-employed? No. I think, I mean, today is an insurance webinar. If we really go too much into detail on the pensions, I think it's gonna lead us too far. But then there is still some, let's say, further analysis coming with the third pillar. But I will let Tom do the introduction for that first.
Okay. So as discussed, we had the first pillar, the state, second pillar, your employer or self-employed. And now if you want to save some extra pension amounts, you can do it extra on private base. You can, at your pension age, you will receive a lump sum capital. It's the same as the second pillar, for example. And you will receive also a tax deduction of 30% on the paid premiums. Just for the same as pillar 2, you can add some life capital.
Excuse me, Tom. Tom, excuse me. When you say 30% deduction,
yes,
What does that mean? It's a lump sum.
We
Does
will,
it
no,
change it?
we'll come back to that. We'll cover that in the next slide. So people, if you have questions, please put them in the chat, because if otherwise we're almost at 2 o'clock. Otherwise it's going to take us too far. But your question will be answered in the next slide.
Sorry, Gregory. Thank
No
you.
problem. No problem.
So you can also add, it's an optional, of course, debt capital, disability due sickness or an accident, and a waiver of premium. Waiver of premium, that means that you have an insurance for the insurance. In case of disability or sickness, you are able to pay the premiums, not by your own, but by the insurance company. So the insurance company will pay the premiums in case of you are disabled by sickness or an accident. That's the waiver of premium. So for the third and last pillar, you can save pension amounts on private base. It's optional, it's not mandatory. Then we have two different systems. We have the classic one, it's called pensioensparen, so saving for your pension. We have a limited amount for 1,050 euros in 2025. It will be indexed directly year per year. So in 26, it will be indexed. And then the second system, we have the classic long-term savings is the same as pension amount, but the maximum amount is higher. It's about 2,500 euros yearly, and it's also indexed. Here you see it's indexed until 2029. Afterwards, it will be getting higher. So all the systems from pillars, from the second pillar and the third pillar, and also in the third pillar, we have the pensioensparen. And the long-term savings are cumulative. So it's up to you to decide, okay, I gonna invest my pension in the second pillar and also in the third pillar. So you can make a combination of them. So it's tailor-made. It depends from your income. It depends from your expectation. What I want for me personally as a pension amount at my pension age. What to do with my children, for example. So it's very, very, very personally. Of course, as a broker, I give you the advice, and I see, okay, today you have pillar 1, you have pillar 2. What is possible in pillar 3? I give you the advice, I give you the calculations.
I think Tom, in general, what we see in practice is that the pension savings scheme is something that most people have. So that's quite standard thing that the bank offers. Whereas the long-term savings scheme, I think traditionally, it was less popular, and also it has been, let's say, in scope of a political initiative to, let's say, completely abolish it. I think it was 2 years ago in spring that Van Petegem was saying, okay, we're going to abolish this completely. The thing is that with this classical long-term savings scheme, usually where you have a mortgage on your property, there is already a life insurance attached to it. Because if you pass away, the bank wants to make sure that they are getting repaid for the outstanding loan amount. And people used to get, for that premium, already get a small benefit into this category of classical long-term savings scheme. So the basket of 2,500 that you have available may already have been used up partially by this mortgage loan and the underlying life insurance premium. So I think that was why initially it's less promoted, I think, in general. It's also that it's a pretty complicated topic, because you have you have two main type of insurance policies available, and that's the famous branch 21 and branch 23. You pay a small 2% insurance tax on the premium. Again, not in all cases, but in most standard life insurance policies. And then it's really, like you said, Tom, it really depends on the investment profile of the client. If you say I'm interested in let's say a guaranteed return, then the branch 21 makes more sense. If you say I am more, let's say, attracted by risk, There is no guaranteed return, but then, yeah, you are linked to what the market is doing. So in that case, the branch 23 is a more suited product. So I think, yeah, the question is always, am I going to follow more into the direction of building additional pension with a focus on getting a capital guaranteed, or am I going to shift away from that and focus more on the investment, the risk linked to what the market is doing? In both cases, you can use this long-term savings deduction. They are both available. It's just that, yeah, the risk profile is different for both types of insurances. And then within each branch, you still have the option, am I going to go for the more focus on pension versus more being focused on investment. But again, yeah, like you said, this is a really tailor-made, let's say, product, because you cannot say do this or do that. It really all depends on yeah, how you're going to stay in Belgium. What else do you have available? Do you have any other plans in Belgium or abroad? And so you really have to look at the full picture, what makes more sense for you in your personal situation. This is just a brief summary to compare within the first category, as we said, at the pension saving of 1,050 euro per year. Yeah, you can have those two different types of savings products, the pension saving insurance, and then the pension saving account. Now, again, I could give already a presentation for at least 1 hour only on this. So it's quite, let's say, complicated. So I think, again, if you have questions about it, and this is like a summary for the long-term savings and the additional scenario available for the 2,450 euro for this year. So that I think is just, yeah, for your information, know that it's out there. If you have more, if you need more input on your personal situation, I would say you can always reach out to Tom for the insurance aspect, or reach out to us for the tax implications. But then I will give the word back to Tom for the disability insurance.
Okay, thanks. So of course we have a big issue to discuss here is the disability. Today, the most important question is to stay healthy. What in case you are not healthy anymore, you are you had an accident, you are sick, what you will receive as an reimbursement. As an employee, the first month you will receive 100% of your normal salary, and from the second month you will receive about 65% of your salary by the Social Security. You have to calculate it for your own, what I earning today, what is my income today, and what in case of sickness or an accident where I'm not able to work. As an employee, you will receive only 65 of your salary. So this is a gap of 35%. Now, on the other side, all your costs will be the same. You have to pay your rent, you have to pay your car, you have to pay your expenses. Maybe you have children. So that's something to keep in your mind. As a self-employed person, the first month you receive nothing, and the second month you receive a minimum salary from the Social Security. Today, as a single person, it's 1,350 euros. If you are married, it's lower. So that's a quite big gap between the earnings today and in case of disability or sickness, what will you have in return as a reimbursement? So we have several insurances to cover disability. It's also tailor-made. So if you have questions, we can discuss, and I can make a tailor-made solution as an employee, as a self-employed person. For the people who have employees, what do you need to do? Of course, if you have at least one employee, you have to protect your employees against accidents on the working floor or on the road to the work. And a mandatory insurance is the accident workers insurance. So it's is to protect your employees against accidents. And very important is if you are a foreign person and you have a business in Spain or in Brazil, and you have to, or you want to start activities in Belgium, foreign insurance policies are not allowed. So you have to underwrite a Belgian policy for your Belgian employees. Then what kind of insurances you can offer to your employees? We discussed already in Pillar 2 the pension contributions for employees paid by the employers. So we have a group insurance plan that is an extra salary for your employees for pension saving in case of disability, death cover, and medical costs. So you can pay contributions in favor of your employees. It's an extra benefit. Like in Belgium, we have a lot of benefits: a car, a laptop, a mobile phone, a contribution for the internet, but also an extra contribution for the salary, pension, disability, death cover, and so further. It's not mandatory, but the most Belgian companies underwrite this kind of insurances in favor of their employees. So it's an extra benefit, an extra salary top up to build an extra pension capital. Also, it covers the employee for a lower salary in case of sickness or disability, and an extra capital for the beneficiaries in case of death, and also medical expenses can be covered. Why you have to underwrite these kind of insurances as an employer? Because it's a war for talent. Today, a lot of companies are in competition with other companies, and it's quite difficult to find the correct people. And if you have contracted the correct employee, maybe it's difficult to keep them on board. So if you want to keep them on board, you have to pay them well, and mostly you can pay them by a car, or in this case, some insurances. We have the general business contracts, of course, the liability insurances. Today we have two kinds of liability insurances. The first one is the professional liability insurance. It's called the contactable insurance. That means that you protect your company against claims arising from professional errors or misconduct. In the company makes a wrong decision or provides incorrect advice, clients or third parties may file a financial claim or take legal action. This insurance covers the compensation owed and also pays the fees of the lawyer you choose. So this means we call it in Belgium resultaatsinsurance, the result insurance. That means that you have a contract with your client and you have a contract to having a result. And if you miss these kind of results, you will receive a claim. And it's up to insurance, this claim, you can underwrite these kinds of insurances. The second
Tom,
part,
I think it's more, Tom. I think it's more for people that are indeed self-employed,
yeah,
and they work with different clients or just one big client, and based on the, let's say, the agreement that they have in place, it could be a contractual obligation between the client and the one providing the services to say, look, you need to have this insurance in place, because if something is going wrong, you need to have a policy in place. It could be indeed contractually obliged to put it in place, or it could also be just as a precaution taken by the client himself, that they say, look, I don't want to take any risks, and I want to effectively have this policy in place if something goes wrong. Because even if you work with a company, a company typically has limited liability, but that does not protect you against wrong decisions or incorrect advice for actually making a mistake. And so even if you say, oh, I have my protection from my limited liability company, yeah, it does not extend that far. So that's why it could indeed be recommended to have this in place as well.
Indeed, Gregory. And then the second one, we have the civil liability. It's quite the same as the first one, but this is an insurance that covers non-contractable claims. This is not for the result that you can cover, but it's only pure for accidents. For example, if there's a gas leak in your office, it causes a fire that damages the neighbor's office, the resulting material damage will be covered. So that's only an insurance that covers non-contractable claims.
And then
like-
also the court
and also the
procedures
legal
resulting-
protection, of course.
Yep.
If you have a discussion with the third party or with the insurance companies about the claim, you can go to court, and then you need lawyers, of course, and the salaries of the lawyers can be reimbursed by these insurances. And then a general business contract for self-employed people who are working for a company from themselves is to protect liability, and it protects the company managers, the people who are taking the decisions. It protecting them against claims arising from decisions or actions taken in the course of their professional duties. D&O insurance covers the defense costs of directors and managers when third parties file claims for alleged wrong acts. If the company is unable to compensate its directors, officers, and employees for the amounts involved, the D&O policy steps in and pays these costs directly, thereby protecting the personal assets of the individual concerned. And the last sentence is very important, thereby protecting the personal assets. It's very important that your professional decisions has not a negative impact at your private possession, your private house, your private money. It has to be separated by your professional activities, and this kind of insurance covers these kinds of claims. Also discussed, if you have a claim with a client, with a third party, with an insurance company, and you have a big discussion, you can also underwrite a legal insurance. A legal insurance is an insurance that includes a wide range of legal areas such as contract law, business law, social law, etc. And the lawyer's fees are paid by the insurance company. Additional support is provided for tax-related matters, if you have discussion with the government, for example, and discussions or disputes with the tax authorities are also covered. Tailor-made solutions, of course, because these kind of insurances are very tailor-made. It depends from your activity, it depends from your turnover, it depends from your numbers of employees you have. So if you want more information or a free quotation about these kind of contracts, you can always contact me. We arrange a meeting because I has to know all the specific details of your company and your activities, and then we can make up a quotation. So all the explanation from the last 1 hour, these are very based, and we have a lot, very large range of insurances, and it would be too much time to handle them all. So this was a very, very short explanation of all the insurances. In general, insurance contracts in Belgium are always for 1 year. It's not possible to say, okay, I want a car insurance for 5 years. No, it's always a contract for 1 year, and it can be extended every year. If you want to cancel an insurance contract, you can cancel it at least 2 months before the renewal date. It's always possible to cancel contracts when you leave Belgium. For example, if you have a car insurance and you will return to, for example, Spain or United States, you sell your car, we can cancel your policy and we can maybe refund the rest of the premium to your bank account. So it's always possible to cancel the insurances. So I hope this was interesting. It was not too much theory, I hope. If you have further questions, you can always take contact with me for a tailor-made solution or questions. I'll be thanking you for listening and for your attention. And I give the word back to Gregory to close. But in my case, I wish you a very nice working day.
Thank you, Tom. Yeah, so that was, I think, a very good, although yeah, short overview of whatever there is available in Belgium. Let me just wait. I see if there's any questions. The chat, I see quite a few. Tim is asking if the own child breaks the TV, can this be used? I think we covered that. No, is that under the
Yeah,
civil
that's
liability insurance?
you can cover it in your fire insurance, like
Okay.
laptops and iPads. You can cover this, but in civil liability, it's covered by the civil liability insurance. But you can cover a laptop or a TV screen in the fire insurance as a car insurance, for example, a full protection insurance. Yeah, that's possible.
Yeah, but the standard civil liability does not include this.
No.
No. Okay. For hospitalization insurance, Tim is asking, I am insured by my employer through DKV. Is it possible to add ambulatory on top as a private contribution in general?
Yes. So if you have an hospitalization insurance paid and underwritten by your employer, you can always go to DKV and ask, okay, this is my policy of my employer, but I want to underwrite an extra outpatient plan on private base. So that's always possible. Of course, you have to pay the premiums by yourself. If this person wants that we can make a quotation and we can arrange this policy, it's always possible.
Would it in general be more interesting in that case to effectively go to the same insurance company or not necessarily?
It's not necessary, but I give the advice to go to the same because it's in case of a claim, it's always better to make the claim to one party. Otherwise, you have to give the claim to party A and always a small part of the claim to party B. It's quite complicated.
It's complicated. Yeah, makes sense. Lisa is asking, I have a question about the S1. Okay, but I don't know what the question is. Lisa, if you can maybe clarify. The S1 is the typical document that the Belgian healthcare asks for if you pay Social Security abroad. So depending whether there is the European system in place or a bilateral Social Security treaty, they need to understand whether you pay it in Belgium. If they ask for an S1, you're not paying it in Belgium, and then you pay it elsewhere within Europe normally. And then based on that contribution statement or certificate of coverage, the health insurance or the healthcare insurer will be able to cover you. So I don't know, Lisa, if that answers your questions. If not, let me know. Yes, so the recording will be made. Jeremy's asking for the recording. So as I said in the beginning, the recording will be made available to you within a few days and also will be made available through our YouTube channel. Is it possible to withdraw the pension before the retirement age? If we leave Belgium at some point in future permanently, what are the options? So that's what I mentioned. State Social Security, you're not able to withdraw. The first pillar stays where it is. The second pillar, like I said, as Tom explained, under some conditions could be either rolled over to another plan, which is most typical within Belgium. So we don't see a lot of rollovers to another country. of the second pillar plan. So alternatively, it's to take out everything now, which, yeah, you always face a tax penalty, or leave it where it is and then, yeah, apply for the lump sum when you retire. I think that's more or less your view as well, Tom.
Yes, yes, indeed, indeed.
Yeah, correct. Jeremy's asking, my understanding is Belgium does not tax US Roth IRA withdrawals. Is that correct? Of course, that relates to non-Belgian pension plans, but indeed, a Roth IRA is a post-tax contribution. And in the technical explanation to the US-Belgian tax treaty, it is included that Belgium does not tax US Roth IRA distributions. Will Belgium tax my US Social Security? No, again, a bit outside the scope of today's presentation, but under the treaty, only the US can tax US Social Security benefits. I would like detailed explanation about early withdrawal for renovation in real estate. I think Tom mentioned that. I think it really, yeah, it's really like a tailor-made thing. You will really have to check what is the personal situation. So I think, Lisa, you can always reach out to Tom, and I'm sure he'll be able to explain in detail. Geoff is asking, what about second pillar type pensions in other countries? Is it possible to contribute to a US IRA while living in Belgium? Does the typical US contribution limits apply, or are they different? Well, that's mainly a US consideration because, yeah, Belgium doesn't really care whether you contribute to a US IRA or not. It's really up to you to decide together with your US financial planner and your US CPA whether that would make any sense. So usually you need to have taxable income in the US in order to contribute to a US IRA, which as a US citizen, you mostly have because you need to report anyway your worldwide income. But that's really more like a US question. That's not something we can discuss in detail today. Yeah, how people can contact you, Tom. I think, yeah, any case, that's available on the slides. Tim is asking, the recent change made 65% for a maximum of 2 years. Yeah, I don't know exactly what that refers to, but I'm sure he will be able to reach out to us, and apparently already left. I will contact you in relations to healthcare insurance of my mother. That is a pensioner of German nationality with a Swiss pension and now just moved to France from France to Belgium. So yeah, sure, Lisa, you can always reach out to us for that. Caroline is asking, professional risk indemnity also available for non-decisions affecting non-Belgian clients? Spanish, Canadian, yes. Okay.
Yes. Yeah.
So then I think we covered everything. In case of I want to change my insurance company about car, is it also required to inform 2 months in advance?
Yes.
I don't know.
Yes.
Yes.
Yeah.
Okay. Okay, I think that's it. No further questions. If there is no further questions from anyone, then I think we can close the presentation here. I think we're right on time. Tom, thank you again for your input.
Thank you,
I'm
Gregory.
sure people will be able to reach out to you whenever needed. We're here, of course, for everything tax related. So thank you everyone for your attention and hope to see you at a future event. And I wish you a pleasant rest of the day. Thank you.
Okay, thank you. Bye.
Bye.